Welcome to the deep dive. Today we're unpacking a really fascinating story from the world of digital assets. It's centered around a Hong Kong listed company called MemeStrategy.
That's right. We'll be looking at their pretty significant investment in Solana. What really drove that decision, and what are the broader implications for crypto and traditional markets.
Exactly. We want to help you understand the why behind the headlines and what it means for this whole evolving Web3 landscape.
So let's get into it.
Okay, let's unpack this MemeStrategy move. They didn't just sort of test the waters, they made headlines, right? First, publicly listed company in Hong Kong to actually invest in Solana directly. What exactly did they do?
Yeah, it was quite the move. They purchased 2,440 Solana, that's SOL, came out to roughly $368,820.
Okay.
And this wasn't just like buying on any exchange. It was done through OSL Group. That's a crypto platform licensed by the Hong Kong Securities and Futures Commission.
Ah, okay, so very official, within a regulated framework.
Precisely.
Yeah.
It signals this was a formal strategic decision, part of their bigger commitment to the whole Solana ecosystem.
Right, but beyond just the transaction, why Solana specifically? What was it about Solana that convinced the board? Because that seems like the key part.
That really is the crux of it. The board apparently saw huge potential in Solana, particularly for real-world asset tokenization.
Okay, explain that a bit. Tokenizing real assets.
Yeah, basically turning things like, property, art, maybe even company shares into digital tokens on the blockchain. And they also saw Solana's strength in AI-driven Web3 solutions.
AI-driven Web3.
Right. Thinking about how artificial intelligence could power, smarter decentralized apps. And this lines up perfectly with MemeStrategy's own Focus AI, blockchain, validation tech, that kind of next-gen stuff.
And there's another layer here too, isn't there, with 9gAg?
Yes. That's fascinating. MemeStrategy is managed by 9gAg. Think about that audience, over 200 million users. They're bringing serious social media and Web3 know-how.
Wow, okay, so it's not just capital, it's expertise too.
Exactly. And they're not just holding the SOL either. They plan to participate in Solana's proof-of-stake system, help secure the network, earn staking rewards.
So turning it into an active yield-generating thing, not just passive holding.
That's the idea. Makes the investment work harder for them.
Okay, so they make this bold move, clearly thought out. Big question then. How did the market react? Especially the traditional market, the Hong Kong Stock Exchange.
Well, the reaction was pretty immediate. And strong. MemeStrategy shares, they jumped 28.5% on the day they announced it.
28.5%, wow.
Yeah, pushed their market cap up to $83.1 million. It really shows, significant investor enthusiasm for this digital asset strategy.
That's a huge vote of confidence. But what does this signal for Solana itself, and maybe for other companies thinking about doing something similar? Is this like a new playbook emerging?
That's a really important question now for, the whole corporate world, potentially. There's an analyst, Thomas Shinsky from Cantor Fitzgerald, who brought up this idea of a Saylor playbook, but for Solana.
Like Michael Saylor with MicroStrategy and Bitcoin, but applied to SOL.
Kind of, yeah. The concept is raise capital, buy SOL, and then leverage Solana's network, its speed, its low cost, which Shinsky points out is great for things like tokenized securities.
Okay.
And if you combine holding SOL with staking it, the argument is you could potentially grow your SOL per share faster than maybe even Bitcoin treasury companies.
That sounds potentially very powerful, but also risky. I mean, crypto is volatile.
Oh, absolutely. Volatility is always part of the equation here. But this playbook idea, it's more about a calculated risk. It's a bet on the long-term tech, the ecosystem's growth, plus getting yields from staking.
Right. A bet on the fundamentals.
Exactly. And we're actually seeing some market data that seems to back this up, or at least show interest in this approach. Think about other firms holding Solana treasuries, Upexi, DeFi Development Corp. Since mid-April, their stocks massively outperformed SOL itself.
How much outperformed?
Get this. Upexi was up 306%. DeFi Development Corp up 207%. In that same time, SOL itself was up about 19%.
Whoa, okay, so the market is definitely rewarding that specific strategy, not just holding SOL.
It certainly looks that way. Yeah. It's rewarding that active integration, that treasury strategy.
So let's bring this back to you, our listener. What's the big takeaway here, understanding this intersection of traditional finance and Web3?
I think this deep dive really highlights a shift. It's not just about listed companies buying crypto anymore. We're seeing them actively integrate into these blockchain ecosystems. Using the tech for strategic growth, maybe getting better returns through staking. and even finding unique advantages like MemeStrategy leveraging 9GH's audience.
Yeah.
It really forces us to think differently about digital assets. They're not just an investment class anymore. They can be fundamentally reshaping how companies manage their money and plan for the future.
Absolutely. It makes you wonder, what's next for investment? What other traditional sectors might follow MemeStrategy's lead here into this sort of decentralized, community-focused world? Definitely something to think about until our next deep dive.